In this video, I am going to give you a portfolio of 5 stocks that are just about as close to buy and hold forever, sleep well at night as you can get. Hi everybody, Joe here, Joe's Investment Express. Now remember, no stock is a buy and hold forever, a buy and forget it. There's always a chance a company gets caught, quote, cooking the books, or like Luckin Coffee, for example. Or maybe the CEO gets crushed by a falling piano. Or maybe the company takes a sudden, rather dubious, unconventional turn and has a jump the shark moment. I'm looking at you, Meta. But in general, these are companies that you can buy and hold and accumulate, and in my opinion, are going to run very steadily and strongly for the next 5, 10, maybe 20 years. Before we get started, as always, just remember this is not investment advice. I want you to make your own investment decisions. I'm not a financial advisor. I have been studying the market, technical and fundamental analysis since 1996. And let's look at the fundamentals of these stocks very quickly. Quick look at the 20-year charts and the 1-year charts. We'll try to get this done in under 10 minutes. And if you stick around after the 5, I'll give you 4 honorable mentions. You can probably guess what they are. So here we go. Here's Old Faithful Apple. What a tremendous, one of the greatest performing stocks of all time. Here's the 20-year chart, up and to the right. That's what you want to see. A few multi-year bases, 2008, 2013, but these for the most part coincide with market crashes. And even now in the crash of 22, the stock is really holding up remarkably well. Let's take a look at the fundamentals. Here's the fundamental story. And as you know, Apple at this point has kind of a rather boring product line. Phones, personal computers, they've got their subscription services. It's all well known. There's nothing really unpredictable about it. And they're moving, improving their technology very slowly and stably, which it's maybe a little disappointing, but it's also good as far as price stability. And here's your annual EPS. And you notice a nice, slow, steady growth, 5.61 in 21, 6.09 in 22, 6.46 in 2023, 0.6% dividend. And they had really good revenue growth for a mega cap. This is, isn't this the largest stock by market cap in the market? I think it is, sitting at about 2.5 trillion right now. As you know, there was a chip shortage which really hurt their sales the last couple quarters. It went 29%, 11%, 9%, 2%. I think that's going to bounce back in the coming quarters as they get their supply issues sorted out. Negative EPS growth in June. Of course, we don't like to see that, but it's been a really turbulent year for all companies. PE ratio of 26. And if we did want to get into this thing, now one thing you could do is just buy a little bit each month. If you wanted to time it a little bit more, we almost see a head and shoulders continuation pattern here. Here's a shoulder, here's the head, here's a shoulder. This shoulder barely undercut the shoulder on the left, which is what we want to see. So if I were going to enter this stock, I'd probably wait for it to get above its 200-day and its 50-day, which are right here. Enter somewhere around here and not enter all at once, but progressively expose my money. You could also draw a line across here. I would not want to see it drop under 148. You might want to wait and make sure that that's going to hold, because it might come down all the way to 130. Let's move on to our next stock. This is good old McDonald's, regardless of how you feel about the restaurant and its positive or negative effect on society. There's no question it has been a steady as she goes, outstanding performer. This is the 20-year chart. Up and to the right, even the bases have been nice and shallow, with the exception of the COVID crash. I'm assuming they must have closed all the restaurants for a while. That is a precipitous dip. My, what a buying opportunity in hindsight. And it's holding up remarkably well in 2022. Let's look at the numbers real quick. Okay, McDonald's fast food restaurants, 40,000 of them. And relative strength is 84. And EPS growing slowly but surely. 9.28 in 2021. 9.86 EPS 2022. 10.6 estimated 2023. Nice little dividend yield of 2.2%. PE ratio, I think, is exactly the same as Apple, 26. And we saw a nice quarterly revenue growth for a big cap until this year, which is a little bit surprising. Maybe those of you who follow McDonald's closely can educate me as to why sales went down. Maybe it has to do with the opening up of other restaurants post-COVID. I don't know. That is a bit perplexing to me. But it's still, EPS was up 8% in June. And good numbers before that. Now, if it had posted in a second, the next quarter, if it posted weak numbers again, then that might give us pause. But I suspect it will keep churning out burgers and profits for years to come. And these companies, quite simply, as long as they continue to grow and keep bringing in more and more money, their stock price is going to follow. Let's look at the 1-year chart. Here we have, gosh, this is kind of a messy, you can almost call this a double bottom, although the second bottom should undercut this bottom. The first bottom actually tried to break out here, but the weakness of the market has just pulled it down. If you are long-term accumulating, this isn't really a bad spot to buy. I wouldn't be surprised if it catches some support on the 200-day, but just move in progressively and slowly, and let's let the stock start moving in the right direction before we put all of our money into it. Alternatively, if you want to be more conservative, you could draw the top of your base here at 266. Wait for it to make a handle and break out above 266. Next, we have Pepsi. There's no question that Apple is the sexier company, but look at this beautiful 20-year chart. After the bank meltdown of 2008, it has been almost nothing but up. We can ignore the COVID blip of 2020. What in the heck happened in mid-2015? Maybe one of you knows that. It's holding up really well. 2022. Let's take a quick look at the numbers. Pepsi has a relative strength of 86. That means it's outperforming 86% of the S&P 500. Actually, I think it's all stocks in terms of technical performance. Nice dividend yield of 2.7%. PE ratio, again, of 26. Boy, that is odd. That's the same as the other two stocks. EPS yearly growth, same thing, slow, steady growth. 6.26 in 21, 6.68 in 22, estimated 7.24 in 23. Revenue growth has slowed down. I guess maybe people are just spending less because of inflation, but it's still churning, showing positive sales numbers, which is better than most companies the last couple quarters, I believe, and still nice high single-digit EPS growth. Now, in a small cap, these are terrible numbers, right? You want to see revenue and EPS growth in the 20s, 30s, as high as possible, triple digits if they can. But these are great big companies, and just a little bit of growth translates into a ton of new income coming into the stock, which in turn it gets reflected eventually in the price. And I got two more for you. This is Costco wholesale membership grocery store. I go shopping there at least once a month. Really hard to get out of there without spending $300, right? Here's the 20-year chart. Boy, it looks really great. Notice that all of these stocks, their charts are pretty darn similar, aren't they? A nice 45-degree angle up and to the right. It really hasn't taken too much damage here in 22. And other than the bank meltdown of 2008, it's really performed quite well. Let's look at the fundamentals. Here's the numbers. PE ratio a little higher, 39. Its relative strength, 77. Earnings, you might want to double check on this, but are coming out tomorrow. And I think that's right, actually. Tomorrow meaning September 22nd, 2022. So we don't want to buy right into earnings. So wait for that report to post before you decide what to do here. This company is very profitable. 2021, about $12 a share. 2022, 13.14. 2023, 14.51 estimated. Little dividend yield of 0.7. I'm assuming that's growing. Double-digit revenue growth, which is outstanding for a big company. The EPS growth was a little slow last quarter at 2%. Double-digit before that. Let's see what this new report is going to show us. And here's the one-year chart. This is one could argue that this is a head and shoulders top. So we might want to wait and see before initiating a new position here. Here's your shoulder. Here's your head. Here's the second shoulder. Now, the second shoulder is supposed to droop quite a bit lower than the first, which it didn't. That's a good sign. And then the neckline is all messed up. I mean, it's an art, not a science, but normally you would do something like that, but that would get you exiting way down here. Instead, you'd probably want to draw a line across 465, but then you've got this congestion. So I'd probably put a line under 445 and sell if it went beneath 445 if I was playing this. On the shorter term, although we're looking at these long term, aren't we? Sorry, it's hard to keep my swing trader thoughts out of this long-term discussion. If you're not already in the stock, though, I would wait for it to get above some of this supply. Wait for it to get above its 50-day or 200-day. And if you are already in and are accumulating, I'd probably just wait a little bit. I like to buy at a little bit higher price when the stock is going in the right direction than catching it on the way down and hoping that I've found the bottom. That's my personal beliefs on that. Let me show you one more here, and then I'll show you my second tier stocks. And this is waste management. This is actually a steeper chart than the others. I wonder if this has outperformed some of these other stocks. We'd have to take a close look, and we're not going to do that right now. But since 2013, it's been a great performer. It's holding up remarkably well, considering the terrible market we've been in. And waste management, if you don't know, is a waste collection, disposal, and recycling service. A relative strength of 92, that's outstanding. PE ratio of 32, a little bit higher. Another wonderfully profitable company. Dividend yield of 1.5. EPS yearly growth, 2021, 4.84. 2022, 5.72. 2023, 6.4 estimated. Double-digit sales growth, rock steady. Double-digit EPS growth. Really, really good numbers considering how lousy the market's been, which makes sense because we still need someone to take out our trash even when the economy is falling apart. One-year chart. So this is actually making a cap. You had a flawed double bottom. The second V needs to be below the first, but you draw a line across here, tried to break out, it failed. This is the old pop and drop we've been seeing all year, and then it broke out. See how this is compressed? Because of this compression, because there weren't any zigs and zags here, this causes the stock often to make a cap. I think in a healthy environment, this stock would have just launched into a new uptrend, but with the weakness the last couple months, it's made this cap here on top of the pattern. But we're seeing a little VCP action, right? We could actually measure this. This contraction is 4.6. This one is 3.7. So we just want to see it tighten up, coil up, break out, and then that would be our buy point. Or like I said, if you want to long-term accumulate this, you could buy, a little bit each month with your paycheck or at your leisure. So those are your 5 stocks that I would be really comfortable holding long-term. Apple, McDonald's, Pepsi, Costco, and Walmart. I'll put the symbols in the description below. And now here's your second tier, your honorable mentions, if you will. These certainly have some strong price potential, but definitely are a bit flawed. The first is Amazon, which was so strong for such a long time, AMZN, but it has pulled back really sharply here, which really gives me pause, and I'd like to see it build out more of the right side of this base before I'd be comfortable getting back into it. There's all this supply over here. These are trapped buyers who may become sellers. We haven't seen anything like that throughout its price history. I guess we did see it in 2008. It took a year or so to work through. I would be surprised if Amazon's run is over, but it certainly might be trapped in a base for a long time. So this would be a hold for me. I certainly would not accumulate anymore right now. Microsoft. One thing that scares me about Microsoft is the price performance. Gosh, it's almost at a 60-degree angle. That seems a little bit less. Seems like that radical price movement is going to be harder to sustain long term. And also its sell-off is quite a bit more than the 5 that I showed you. I'd like to see this start working up the right side of a base before I entered this one. And you might even consider lightening up on this one or on Amazon if you own it. That's a pretty severe pullback. Albeit though, 2008, it made a severe pullback. And, look at it now. We're not going to look at the fundamentals of these honorable mention stocks, but they're good. They're definitely good. The third one, of course, is Google. This is GOOGL. This is just the shares that allow you to vote. GOOG is virtually the same. Nice 45-degree angle up and to the right. This is a little bit of a newer issue. Certainly this is a cash machine, but they have pulled back pretty doggone hard, like Microsoft and Amazon, and I would like to see it start building out the right side of a base. Again, before I moved into it, it's possible it might get trapped for a long time. Look at 2008, 1, 2, 3, 4, 5 years. It based for 5 years before it made a new high, and that's possible again right now. The last one is Tesla. Spectacular price performance, 2020 to almost 22 really. But is this a sleep well at night chart? I think just had a bit of a coughing attack there. I think with their genius, eccentric CEO Elon Musk, the unpredictable nature of the product launches, delays of FSD, Cybertruck, etc., and the bucking bronco nature of the chart, I feel like this is a stock probably worth having in your portfolio, but not one that you can just buy and look at every once in a while and ignore for the most part. I think Elon and Tesla require some babysitting. As far as getting into this one, the chart is starting to look better. Here's your big left side, but recently it did regain its 50-day and 200-day simple moving average, and it's tightening up here in this little base. I'm personally, if I was going to get into the stock or out of here, I'd wait for it to clear this supply at 315. So lastly, when do we know Well, I guess I kind of talked about when to get out of these stocks. If it does a radical change in the business, like Facebook turning into Meta, if there's a change, when Elon steps down, or a big change in management can trigger a time to move out of a long-term stock. If they have two disappointing quarterly reports in a row without a good one-off excuse, environmental factors and so forth, then that would be a reason to get out. Otherwise, I think you just accumulate and, keep a half an eye on the headlines. Read the quarterly transcripts of the quarterly reports each quarter. That just takes, 5 or 10 minutes. And that's pretty easy to find. If you just Google the stock symbol plus transcript, you'll find it easy enough. And you could set an alert if through your brokerage. For example, if I owned Apple, I would probably set an alert to warn me if it hit 130, and then I don't have to check it every day. Because if you're holding something for 5 or 10 or 20 years, it's probably counterproductive to watch the stock price every day. Just let it, you do your thing and let it do its things. Well, those are my thoughts on these stocks. Hey, I know there's other ones out there. If you have some other great hold near forever stocks that you'd like to add to the discussion, put them down in the comments below, or give me your thoughts on the comments. Give me your thoughts on the stocks mentioned in this video. And of course, like the video. That helps get it out to more people. Thanks, everybody. Let's get through this rocky market together. I really think the bull market is coming soon. Maybe the end of October. We'll find out. Take care, everybody.